Hey guys, how are you? Chris here. It is June the 1st. I'm going to do a little Monday trade review. So I ended the day red today. I had one trade that I took and I bought some contracts and I let them go to zero practically. So we'll go over that because there's interesting things about this trade. And if I would have been on the opposite side of that trade, well, I would have ended up with 100% profits of what those contracts were worth. Because as you can see, we had this rally here that I have no idea what it is. It's just like, I just don't like it. Like when I see that, it's just like, I don't like that. It doesn't look healthy to me. You can see that the NASDAQ had a similar rally. However, it wasn't as exaggerated as the S&Ps or the healthcare sector. So if you take a look at what the healthcare sector did, it was this nonsense here where we broke down in the morning, caught a bottom, and then once we kind of caught the bottom and then broke back above it, this sort of rally here, this is the I'm going to call it the premium destruction rally right here, because this will kill premium in both directions. If you're long calls or if you're long puts, unless you're long calls that are close to the money or in the money, this is going to kill the time value in those puts. And I don't know how they did this, but really this is just like one of the worst things I've ever experienced actually. So we'll go over it real quick. So you can see SPY opened up in sort of a range here and then we broke bullish. Once it broke bullish, we managed to eventually pull back. So this was an example of a stretched move and then we had another break and this break got no follow through. So this would have been a good opportunity to fade and with a stop above 305. And that would have worked if you faded it back to the moving average after the initial stretched move, okay? Now after this is when it gets a little bit interesting. You can see how we're kind of breaking the higher highs here, but not seeing a lot of follow through. You see that we had a huge upper wick there way up to above 305, and then we slowly continued the low volume grind up, pull back to the moving average and grind. We managed to pull back down to the 26 period here, caught the bid down near 304.75 or so, and then we came up for a lower high. There was not enough buyers to keep this going, and the sellers took control, managed to push it back down to the VWAP. And you can see here how we resulted in another leg down here, and it was just a failure. And that could have been a good opportunity to get long just for a little scalp, although it wouldn't have resulted in much profit because you would have had to get out really quickly on that candle. Another leg down to the VWAP, no follow through, and you can see that the bulls took control there. I was actually unaware of the fact that the VWAP was here. That would have been probably a signal. Maybe next time I'll try to be more aware of. Anyhow, so I was scaling into some puts because I was expecting this downtrend to continue at this point, okay? So what I did was I was getting into these put options here on these pops. So I'll show you my trade log. 11.34, I got in at 37, 31, and then again at 23. So my average price would have been $30 on these contracts. So, and I was getting in on the bids, right? I wasn't like getting in panic mode. I was getting in, I got in near the top of this candle, near the top of that candle. As you can see, there was no opportunity to take profit in any of this. Maybe here I could have had some, but it lasted very quickly. And that wasn't what I was looking for, actually. I was looking for a lower high and then a lower low type of thing for this downtrend to continue. Now, that's where I added the last contract where you see we have a very extended move up. And now this right here, well, is what killed me. So no remorse for the bears at all. Low volume, grinding all the way up. And, you know, I had to be more strict with my stop loss on these puts. I managed to hold them all day and let them get worthless because, you know, you don't know what's going to happen. You know, you can see that once we reach the high of the day, how is it reacting? We pull back, chop around a bit, hold it, and then eventually continue higher. So if there's no meaningful selling action there, then, you know, we'll likely continue higher. So my mistake was holding these puts when I had to be more strict about the stop loss. When I was in them, I had to put a conditional order to cut them if we reached a certain price. So there's a discipline factor there that was missing with this trade. All right, so one of the big mistakes with this trade was the fact that I was long the 303 puts. And as you can see, when I was buying them, SPY was trading just under 305. So I was about a point and a half out of the money on those contracts, and they were expiring today. So I think that was part of the mistake in my trade, because if I would have been a little closer to the money, there would have been more opportunity to get out for break even, potentially later in the day, or even on this drop right here. I think it would have been better in general. So this is a rule of thumb I'm going to create for myself. If I'm scalping long options, same day expiry, I want to be trading certain options that are closer to the money, because that's generally an understanding that if you're going to be selling options, you want to try and go a little further out of the money. And if you want to buy options, you can still be out of the money, but be a little closer, because your gains are going to be when that option goes from being out of the money to being in the money, right? So for example, let's say hypothetically my trade worked out and I was long the 304s. When we were pushing below 304, these contracts were going to be, doing 75% to 100% in profit, right? And those things can move fast, especially in same day expiry. So generally, I think with this trade here, because I decided to get long these puts, I think I needed a more defined stop loss. And it was generally going to be, it should have been probably above the high of the day at that point, because so I was looking at this trade originally and I said, all right, since we're making lower highs, most likely I'm going to keep my stop above 305. But the thing is, I didn't respect the stop when we traded at that price because I wanted to see how we reacted. And then as we grinded higher, I just left these puts on. So I was irresponsible for not cutting them completely. And I'm going to blame myself for that, the fact that I was completely irresponsible with not cutting these options, right? I left them too much leeway. And when they were this much out of the money right here, we're more than 2 points out of the money, and the market is grinding on low volume, I needed to be more responsible with cutting them, in fact. So later in the day, I took another trade here. And what I did was I shorted the 306 calls. And this trade here was a better trade. I managed to get out for some profits by the end of the day here. And I actually had a very defined stop in this trade. Okay, and my stop didn't get hit. So we'll go into depth with this trade. So I collected $41 for that trade, plus commission, so it would have been around 37. And I entered it right here, okay? So right here when SPY was trading at 305.60. I was basing it off of these high pivots right here, okay? So when I entered the trade originally, I wanted to base it off of this high, but then I realized I had to base my stop off of this high right here, which would have been 306.11. And then even a little bit above that, keep the stop, okay? Because the market came extremely close to my stop as it was moving higher today. And I was curious about how it was going to react around those prices. And again, because it was a short call trade, there was more margin for error than just being long contracts like I was in the earlier trade, okay? So let's get back to the SPY chart here. Yeah. So basically that level that I just showed you, it would have been 306.10 to 306.20. And you can see here the post-market highs on Friday were around that level. 306.13 was the high tick there. So 306.21, that's where we topped out today. And you can see how we had multiple tops, multiple attempts to get above that level. And honestly, based on this whole event here, this whole rally, I knew that it was likely that when we lost this pattern, we were likely going to see at least a two-legged pullback, and that was it right there. So once we finally lost it, we saw a two-legged pullback to the moving average. And then we came back up for a lower high, and then it resulted in a trading range into the close with a bit of selling pressure. So those 306s expired near worthless, I believe. Now I covered them for near worthless because I wasn't going to take that risk in the last 5 minutes of trading. So generally where I had my stop with this trade was above 306.20, and I originally had it around 306.20 and I moved it to above 306.25. So I had it at 306.26 and it didn't get triggered to buy back that short option, okay? And the good thing with that is that once we finally saw a bit of selling pressure here, that contract, the 306, was having an extremely hard time being profitable for anybody who owned that contract. So it was good to be short that contract, especially after this kind of pattern had finally stopped. After we pulled back here, we even had another rally here, which would just resulted in a lower high, then pulled back for another low with no follow through for another lower high. So there was significant opportunity here for in both directions. I guess since the fact that I was long those puts and I just wanted to get out of them or wanted to be curious about what would happen, I guess it kind of stopped me from being able to perceive some of these opportunities here where we had the bulls come in right here after a two-legged pullback with no follow through. And then finally, again, after a bear break with no follow through, we resulted in a nice lower high. This pattern right here, I was questionable about this pattern because you can see that we pulled back and we have this perfect bullish reversal candlestick. And you can see that there was some profit in that trade, but towards the end of the day, it did get tested, right? So if you based the trade off of that and you didn't take profit, you paid for it here because they came to get your stop. But the market didn't see considerable selling into the close. It could have been much worse. Anyhow, so that was my trading day, guys. And I'm going to go over certain things regarding my trading, especially about which strikes I choose with same day expiry options. So I got into these 303 puts anticipating that they would see some profit, but I forgot to realize that they were out of the money enough that if SPY were to just kind of grind with an upside bias, that they would expire fast. So I didn't realize that the edge with those 303 was actually on the opposite side of the trade that I took there. So I was on the wrong side of those 303 puts. Absolutely. For SPY to head down to 303 here, we would have had to see, you know, a lower high and then a lower low, and then they would test this support. Maybe buyers would come back in there, and then, you know, they would have to, unless we would see considerable volume and considerable selling, which means all sectors going down at the same time, then the chances of that 303 put getting in the money were lower, were a lot lower. Okay, and I guess I didn't realize that because I was in scalper mode where I wanted to get long the puts, and I thought I was clever by getting in on the bids, and in reality, you know, I was, because I was getting in at good prices. But the thing is, because how out of the money they were, there was limited profits to be had in these contracts. And at the same time, well, I got caught on the wrong side of this, and this sort of thing happened. So, you know, how you expect to make money as a short when you got only this thing, you know? So shorts really got railed today with this big thing right here that just killed the premium. And, you know, you could have even been long the 306s. If you would have been long the 306s, you would have made some money eventually, depending on where you bought them. But like if you bought the 306s here, you didn't make much money during all of this. And so that's why you have to be really strategic and tactical with where you pick up your options and which strikes you trade. All right, guys, so that's going to be it for today. I wish you a great day, and we are planning to get better every single day. All right, catch you soon. Take care. Bye.